The Headwater Sourceman here again. It's January the 9th, 2023. A bunch of news releases today on a Monday, so you expect pretty much the news releases to be good, because that's typically when companies put out their, well, highlight news. Metals starting to, well, see some pressure, I guess. Copper is up a lot though. I think nickel is down, oil up, but has gone down a bit. Markets are ripping, dollar tanking. It's like, as chaotic as any other market day. I have no idea why stuff is going up or why some stuff is going down. And that's why I don't pay attention to it. I was gonna check crypto. Even crypto's up actually. So a bit of a, I guess risk on. Again, copper, which is, Dr. Copper, and markets up, and even people dabble in crypto again. Anyway, so a bunch of news releases today. First of all, Goliath intersects 13.53 grams per ton AU equivalent. Most of that is actually gold, which is kind of interesting. It's not a 50-50. Over 11 meters within shorebed zones, 1.6 square kilometer area, averaging 6.31 grams per ton AU equivalent over 6.88 meters. So that's the average from pretty much all holes so far, which is obviously a respectable 36 gram meter average. And as always, it's a very meaty news release. There's a bunch of stuff, descriptions of some of the highlighted holes, etc. But as always, I think the edge really is to front run the future. What the most important things I think news release tells us is not what has just happened, but what it says about what might happen in the future. So I expect Quinton to go over these results. Again, it's like actually too meaty for me to go into, especially in a what I will try to make a short news update. Anyway, here's one section. Newly discovered extensive mineralized shorebed corridor remains open. Bulk leach extractable gold, BLEG, and stream sediment sampling undertaken during the 2022 field season has identified the new north-south striking mineralized shorebed corridor extending for 8 kilometers by 3.5 kilometers from the Ace in the Hole target area to the gold swarm discovery, including from south to north the new Ace in the Hole target area, the new Humdinger target area located across the valley to the south of the shorebed extension zone, the extension zone, the shorebed zone, the new Sunrise target area located in the east of Gold Swarm, and the Gold Swarm discovery. BLEG samples collected from streams acid up to 42.75 parts per billion AU on the new Sunrise target, and up to these are very high BLEG samples. So it suggests that yes, there's indeed outcropping mineralization there, perhaps high grades given the numbers here. The geological team has identified a series of targets within the catchments of the streams for follow-up prospecting and mapping in 2023. So what we can say, okay, holes overall, there's some good stuff. 4.98 over 3.7, and obviously better and some worse than that. What makes the shorebed zone extra interesting is obviously the fact that the processing might be very cheap, since it appears that a lot of the gold and silver can be recovered via gravity. So all else equal, grades at the shorebed zone might have higher margins than same grades in other types of systems, but simply because it's cheaper to process. So who knows what this might be in your average, gold target equivalent. Maybe this is more like 7 grams per ton, if you compare the actual economic value of the mineralization. I don't know what the exact number is. It's just that, yes, we can't just look obviously at grades. That goes for any system. I mean, there's some systems with refractory ore, for example, where even at 2 grams per ton, I mean the Donlin Creek project, for example, that's refractory ore. So it's a huge deposit, which could make it work, because you have to invest so much capex just to have a plant that can process refractory ore, and that's not cheap. But you obviously would want the cheapest kind of processing scenario, because that means each ounce is worth more. And an ounce in the ground is only as valuable as the economics of it. So again, what this tells us is that, yes, as is typical, there's some great hits, some good hits, and some, let's say subpar hits. And I don't know, maybe this is actually economical as well. Not 100%. Some stuff will be, 9.74 grams per ton AU equivalent over 4. That should be highly economic, given, again, the possibility of the processing being extremely cheap, possibly being extremely cheap. So yes, this system is very much alive. And again, I think the actual grades undersells the value of the hits, or potential value of the hits, because they obviously don't, it's not included how much you would make, at X grades, although that is actually what is the main thing, what is actually important, because it's, the whole idea of an ounce in the ground being valuable is how much money you make on it. But we also learn, which is nice, that blue sky, it looks like it's growing, let's say. That there's a bunch more targets. So let's just say that they are learning more and more, obviously, about the shorebed zone. They have learned that it appears that this structure here, this fault, might actually be a feeder zone. So, okay, let's fast forward the tape until this coming field season. A minimum of 21 drill pads have been planned in preparation for the 2023 drill program. That's just the drill program. Obviously, they will prospect and probably do some maybe channel sampling, etc., if they find some nice outcropping structures here. Gold swarm, for example. Apparently, there's gold swarm at least 2, 3, and 4. I don't know what actual gold swarm 1 is. Maybe this whole thing is called gold swarm 1. I don't know, but anyway, okay, so they will obviously have a better grasp of the shorebed zone, because what they did this season was a shotgun approach. They basically carpet bombed this entire area here, and even in the new extension zone, which they discovered last year, and that's already paying off, because some of the best hits are, I think, near this possible feeder zone here. And that's why you see more concentration here. So basically, there will be more holes planned where they hit, let's say, the best grades. Because at the end of the day, this whole thing won't be economically mineralized. There will be streaks and zones where it's basically thicker and maybe high grade, etc. And that, after having, cast a wide net, they obviously flushed out some zones where, hey, this is where the mineralization appears to be thicker and or higher grade. So if we fast forward again, I would expect the average assays to be better this coming season relative to the ones the season that is pretty much done already. Why? Again, because they now know where they are gonna try to focus in on the best possible zones in the shorebed zone. and also the extension zone. And this appears to be, I mean, obviously they're seeing something here that makes them want to drill test this immediately, while they have a bunch of other targets, but they can't, drill everything. But as always, exploration is a process, so they're learning more. They're learning where the better stuff is. So that means, all else equal, I expect in 12 months they will have had better results on average, especially from near the shorebed zone and extension, than we've had this year, because they know more. And who knows what comes up from these all these targets, and including the drilling here. Main thing, okay, takeaways. Right now, market is short-term focused, obviously. There was, and today there's a bunch of news out, and juniors aren't doing too well, even though gold and silver is up. So it's a damper, and obviously I think there's some, let's say front running of a financing, etc. And that is like one of these bad carrots that's dangling in front of the market. So everybody's trying to front run a financing and don't really pay much attention to the fact that, hey, I mean, regardless of and when they raise, I mean, the idea is that that's probably gonna create more value than they diluted and raised in cash. So it's a net positive anyway, and we can't do anything without cash. But if I were to fast forward 12 months, I think that I think Goliath will be trading higher, because it looks like still shorebed zone looks very robust. They have a better handle, and obviously it's always nice to see that blue sky increases, because the idea, or Quinton's idea, is that this is just one, piece of a possible mega structure or mineralized, I guess, mineralized zone that came up in this area, and that you find some of these pieces all over the place. So maybe this, I mean, the extension zone appears that it might be a broken off piece of this, and here we might find more. This might be more pieces of what created this, pretty much, because the gold swarm mineralization looks pretty much like, and they state that in the news release, looks like shorebed zone mineralization. So who knows, maybe there was some, way back when, some giant mineralizing event, and after that obviously tectonics and faults and yada yada, and contraction and sliding faults, whatever. So now they're scattered all over the place, but that's obviously good. If we have some multi-million ounce potential just here, and we have a lot of blue sky on top of that, that's really good, because what we want, in my opinion, is probable upside and high potential upside. And I think the current market cap's down to like 70 million. That's non-diluted, or not fully diluted at least. So after a raise, yada yada, let's call it 100 million. I wouldn't say that's expensive for a project that looks like this amount of potential, this amount of probable potential, possibly very cheap to process, etc. And again, that's, in my opinion, our job. What is the price I'm paying today? How is this going to look like in 12 to 24 months? Because nobody cares about that right now. So I think the risk reward is solid in Goliath, because if this ends up, really bearing fruit, obviously 100 million Canadian doesn't capture let's say what might end up being a multi-million ounce high grade gold and silver system, and who knows what the economics could be if they do a PEA with the more metallurgical results, and the metallurgy ends up being as good as it looks, etc. I mean, I would just guess, several hundreds of millions anyway. And if it, goes over 3 million ounces, whatever, that would make it one of the larger gold silver deposits in British Columbia, and possibly quite economic. No guarantees, of course, but it's like one of these, or one discovery story that pays off is supposed to pay for a lot of stores that do not end up working out. Pacific Ridge also announced that they intersects high-grade copper gold mineralization in every drill hole at RDP's day zone, including 59.4 meters of 1.68 copper equivalent. I mean, that's a bulk, pretty good grades for a bulk mineralization. And obviously that they hit in all holes is good as well. It's Antofagasta, which is a major company that is operating. I think they are the operators. And they're earning into 75% interest, spending $10 million on exploration over 8 years and delivering a preliminary economic assessment report. My hunch, my bet is that these are, I mean, if you hit in every hole, that's obviously really good. And at grades that we're seeing, I mean, CU equivalent, there's a bunch of 1 meters, and again, pretty good widths, etc. I mean, this is high grade stuff, especially, I mean, from almost starting at surface. We need some size, obviously, and that Antofagasta needs to see some size as well, but you have also, 500 meter intercept of 0.78. So there might be, high grade stuff starting at surface, and there might be a halo of, I mean, these are sturdy grades. I mean, this is basically what Brixton Metals is chasing at 1 kilometer depth, pretty much, which could even warrant a possible block cave operation, and is the reason why BHP got in with a placement. And obviously, again, why is Antofagasta interested in RDP? They need a big project. They need something big, something very valuable to be worth their time. So I'm assuming that just quotes here, we're extremely pleased with the results from our first ever drill program at RDP, especially the drill hole RDP 005, which returned one of BC's best copper intercepts last year, said Blaine Monahan. Future drilling at RDP will be focused on expanding mineralized footprint at the day zone, which remains open in almost every direction. So we could expect that Antofagasta is going to continue to drill this coming season, and there will be more good grade hits. And again, if things go well, maybe this will end up being an actual significant discovery and a mine. And obviously, if you own 25% of that, given Pacific Ridge market cap, that's quite low. I mean, 25% of an actual mine that would be of interest to Antofagasta would be worth obviously several hundred millions, if not billion plus. So if you own 25% of that, so let's say, I don't know, 5% chance of this being a major discovery being priced in. Is that cheap or expensive? I don't know. But we can't forget, of course, that the thing with Pacific Ridge is they own 1, 2, 3, 4, 5 copper gold projects. I think they own some peripheral gold assets as well. But it's like, that's, I think, one of the main attractions with Pacific Ridge, that you get diversification via the amount of targets, and you have Antofagasta basically funding the exploration here, and they're very cashed up. I think they have around 8 million to go and continue to explore Clayul. 8 million, that can go quite a long way, and I think Pacific Ridge is very cheap. I mean, based on, copper is probably we're gonna need a bunch more copper, and this is British Columbia, where there are some copper giants, and they're having this kind of success early on, but that's the market for you. Copper juniors aren't that hot right now, so they're cheap. Newfound announces the continuation of environmental baseline and pre-development studies. I mean, this is a lot of signal value, obviously, that they're serious. Environmental studies, baseline studies are entering the 3rd year and will ensure that Newfound is in a favorable position to support future regulatory mine permitting requirements. We know that Newfoundland wants to have more mines. The company's retained metallurgist. Newfound will also be initiating a number of pre-development studies, including geotechnical and yada yada. In addition, Newfound is continuing engagement with stakeholders, regulators, and our local communities. So this is basically de-risking stuff. And again, a signal value that, hey, we're serious. We're gonna ask questions and push stuff which is gonna jack up the implied value of what they've already found, because obviously the more you de-risk something, the closer it gets to being an actual mine. So the ounces that they've already found go up in value, and then the ounces they'll find after that. We are pleased with the progress to date on our environmental baseline work at the Queensway project, and excited to be progressing pre-development study work, including metallurgical testing, host rock characterization, geochemistry, and geotechnical investigations. By being proactive at this early stage of project development, we are confident we will be well placed to accelerate future project design and regulatory permitting. And we know they recently raised $50 million, so someone through another $50 million at Newfound Gold. Basically, $50 million of, hey, I think this is a good bet. We know they have very high grades, high grade to bonanza grade, and also lower grade halos. Most of the stuff that they found, including the high grade and bonanza grade, is quite shallow. So I'm not a mining engineer, obviously, but it's like somebody's throwing money at Newfound, and they're gonna keep on de-risking this and have it closer to some kind of potential development decision. And I think insiders still own a big amount. Eric Sprott obviously owns a lot, and he knows what happened with Fosterville. So who knows? I mean, with the recent discovery to the west, which hit very high grades over long intervals, I think this is a story that they will continue to find more gold. And I like the fact that they're de-risking it at the same time, because if you find more gold, obviously value goes up, but if you also de-risk all the gold, the value of all ounces that you found and can find will also go up. So I really like that approach. And who knows? Maybe, just maybe, there will come a time when they have delineated nice, good, high-grade stuff kind of near surface, and they could maybe have a starter operation, let's say, because of the grades, etc. Maybe it will have very good payback, etc. And we also have from Defense Metals, Discovery Group's John Robbins joins Defense Metals as a strategic advisor. I think this is good signal value, because he is pretty famous, serious professional. So if he ties his name to Defense Metals, that is obviously a sign that it's a high quality project. So I really like that. It's like, for a retail investor, I really like validation from people that are very much smarter than yourself, and John Robbins knows a lot more about mining, etc. than myself. John brings more than 35 years of experience in all facets of exploration and mine development to Defense Metals, most recently with the sale of Great Bear Resources to Kinross for $1.8 billion. As we continue to advance our Wichita rare earths element project, John will provide a wealth of knowledge, expertise, guidance, and industry relationships to our company. I wish to thank him once again for the financial support and commitments he had made to work with Defense Metals. And then you can read what John actually says here. I'm excited to join the team at Defense Metals as both a shareholder and strategic advisor. This company represents a unique opportunity in the resource space, having one of the best critical metals projects globally with outstanding infrastructure located here in Canada. For the first time in my career, we are witnessing an unprecedented level of support socially and at regulatory levels for critical metals projects. That's what I talked about in the last video when I discussed Magna. I mean, for the first, like he says, unprecedented basically, that the mining sector used to have so many headwinds, but now, at least with these critical metals, they're actually encouraged. You have tailwinds from the powers that be to actually prove up and build these projects. Wichita is ideally positioned as it advances through the next stages of development, building towards securing a significant link in a critical supply chain for the Western world. I mean, there's not too many Wichita deposits around, and these are rare earth metals, and I see articles almost every day talking about, you know, China's control of the rare earth metals, etc., etc. So this is again a critical strategic, from a strategic sense, to secure domestic North American supply, and this is one of the I think best resources of any junior as it comes to that point. Obviously, I'm not a rare earth expert, but again, if John Robbins invests money and says, you know, this is a great opportunity, a great asset, I believe him. And of course, which I covered last video, Magna intersects high-grade PGM footwall mineralization at Green Hill. I mean, this is Gold Discovery's short where they... Of course, this is Monday, so a bunch of juniors will put out, if they have some good stuff to release, they'll put it out now, and there's some good stuff in here, obviously. I mean, Headwater Gold, oh right, I forgot about them. Headwater Gold also drilled, let's see here. Yeah, okay, it's up 22%. They're delivering. I mean, some, you know, these are just some of the first holes into the Spring Peak project. And this is Newcrest that's funding this. Proof of concept, basically. They hit high grade immediately where you kind of expected it there to be. So, and there were two intercepts. Well, first of all, I guess the broad one is, 34.72 meters, so 2.73. And within that, there was 2.3 meters of 15 and 2 meters of 10. I mean, that's good stuff. I don't know exactly, sure the true width appears to be a bit lower than that. Still, I mean, this early on, that is a significant hole, obviously. I mean, this is over 50 gram meters, which, according to the Kennerland study, is very encouraging this early on. So this is live. This is all of a sudden I would say a full-blown discovery, and it's, you know, there's left to see how big of a discovery it is. Thereafter, small tonnage, high-grade ounces, very economic ounces. They're not after, you know, 5 million ounces, etc. They're after, they are total pros. They are well aware of the economics, that even a high-grade 1 million ounce deposit might be worth a lot more than a 3 million ounce deposit with low grades or at least low margins. And there's a bunch of assays pending, obviously. Here they hit 38.1, so we can assume that this hole is going to hit something and this hole is going to hit something. And then there's a lot of left to explore. So I think, I mean, Spring Peak, if we're talking, you know, probable upside, yes, I think there's probable upside. If we fast forward 10 holes more, I think some of those holes would hit something similar. And then we can, you know, think, okay, what's that going to do to share price and, you know, how people look at the company. Great stuff. Anyway, back to Magna. Yeah, I mean, just a barn burner hole. It's like, I mean, this is highlights. And maybe some of the, or I think many of these releases were like maybe 5 to 10 holes in one news release. And they obviously put the best hole here. Magna just released one hole, and that was the best hole of all that were real. I think, is that better than... Well, I guess this is kind of equal. I don't see where the actual box is put here. Maybe that's here. Yeah, I think so. Okay, so Magna even better than that in that case. Anyway, yeah, it's actually a slightly better. I mean, that's the scary stuff. It's like Magna has drilled 3 holes. Sure, there's like, it's brownfield exploration, but every single hole has pretty much been a barn burner. And this is even from another zone than the last hole, which had like, I don't remember, like 30 meters of 6% nickel and a bunch of other stuff. What's interesting, obviously, is like this is the PGM stuff starting to show up. I mean, if you just took the PGM, like imagine drilling 7.2 meters of gold over 98 meters. And that's actually the bulk of it. I mean, obnoxiously good drill result, obviously. And they're about to start a 15,000 meter drill campaign, and there's 7 holes left. So basically, they've released 3 holes so far. Sure, it's brownfield exploration, but they're still adding ounces, I would say. And it's just incredible news assay results. Just mind-numbingly good. So imagine, I mean, 15,000 meters. How many holes will that be? I don't know. I mean, they're not drilling 5,000 meter holes. So let's say they're gonna drill, I don't know, 30 to 40 holes or whatever, and they have 7 left to report just from this campaign. I think there's, over the next 6 months, I think there's gonna be, well, I guess they're gonna keep drilling given the results. So maybe throughout this entire year, they're gonna be plowing out drill results, and you will sometimes see results as good as this. And that's the funny part. Is like Magna is already incredibly undervalued based on what is already there. But it's obvious, like always, I mean, it takes some kind of assay results to just get people to, there to buy or whatever. So I don't think, I mean, this hit is not priced in because the known success already is not priced in. So this is like icing on the valuation cake. And that's some nice icing. Anyway, yeah, so I mean, I don't know what to say really. It's like they drill 3 holes and every single hole has been a highlight of highlight holes so far. I mean, it's not like they drilled 30 holes and got 3 good ones. They drilled 3, and every single one has been absolutely stellar. So yeah, you can imagine what the news flow is going to look like over the next 12 months and what that might do to the market cap. Brixton Metals, really good hits actually. Of course, there's a bit smearing here, like 14 meters of 10.7, which, I mean, stellar. That's like, what, 140 gram meter intercept. So this bulk, the bulk interval here, I mean, it's the residual grade is, that's not an even 1.19 grams per ton, but regardless, it's like, let's say, I don't know what this is if you take away this, but I think it's pretty good bulk mineralization anyway. Or if you just go for the high grade stuff, I mean, 14 of 10 is obviously superb. Here, like 6.57 for 20 gram, I mean, really, really good. 26 meters, 3.43, includes, 9 meters of 7.31, 3 meters of 17, 4 meters of 10, and this is their whole whopper of a Thorn project. So, okay, what is one thing? Sure, it's not like, I mean, this is mostly concentrated. I mean, these are not step-out holes, if you know what I mean. But it's like, okay, 400 meters of strike, and obviously, I mean, they're hitting some stuff away from that, and we can see the trend here. I mean, yeah, this is the gold trend. This is trappers. I mean, there's a, if you count this whole thing, that's 11 kilometers. So, I mean, it's obvious that this 400 to 500 meter stretch here cannot explain this many kilometers of anomalous rock chip samples and soil anomalies. So it's a really good start, I would say. And it's like, that's what I like with Brixton. It's like they have multiple avenues for upside. If only, quote only, Trapper works out, maybe that's a company maker. I think they'll need to find more, but still. Metla, still pretty much virgin exploration. They're going to be hitting that next season. And Camp Creek, where they now have after listening to Quinton's presentation, he has an idea where he thinks the mineralization is trending, and if the company agrees with that, then they haven't even had the first technical meeting with the BHP guys. So let's fast forward again, like 6 months. They're cashed up. They're going to be drilling more at Trapper, which is getting close to some kind of, I guess, critical mass in terms of, hey, this is, a legit target. Metla will be pure potential upside, but could be very high impact given that they are finding bornite and gold at surface. And then you, of course, have the main course, which is more drilling at Camp Creek. So I hope Brixton goes down a bit or stays quiet now that, we're still in the winter season. There's going to be a few months until they kick off the exploration campaign. But I think next drill season, this drill season that's coming up, will be the most exciting one yet. Because now people are gonna, they will know more about Metla, so the chance of finding something there goes up. One could assume that the emotional charge with Camp Creek will be even better because they now, well, first of all, they hit in the other holes. It was just that they didn't hit the high-grade core, if there is one, let's say. But now they have an idea. So I think that's going to be speculation pressure to the upside from 3 directions. And they have Langis and they have some other joint ventures, etc. as well. So I think Brixton is cheap based on the sum of its parts, and they will have more impact drilling than most juniors. And that's for at least 3 targets. If you count their cobalt silver project at Langis, that's 4 targets. So there you get a lot of bang for your speculative buck in Brixton. And the more they risk, the more the margin of safety, if one could call it that at this early stage, but it's like it's still being walked up at least. I mean, a few holes here and you don't really know what you have, but now it might start to look like, hey, maybe there's, I haven't done any calculations, but it's like, hey, this is starting to possibly be, I don't know, 1 million ounces or something. I mean, depending if you use bulk or high grade. But I would expect them to find more here. And it's obvious that Brixton are very good explorers. So it's like a bunch of smart people where the more they know, the better their targeting will be. It's like with Goliath. They have more information now. So I expect the coming drill program to have the base case is that it will be even better than last year, and so on and so forth, which is obviously nice because we want to play the probabilities, and the probabilities of success go up and price goes down a bit. That's good. And I talked about Headwater Gold. So a lot of news out today. Happy to be, I mean, I don't think any one of these is expensive at all. So it's like, what's my overall strategy? Well, I hold something typically until it is not cheap. And I buy more if it gets cheaper. So again, I'm just, I don't try to be cute. I don't try to time tops or bottoms, etc. I just think that really any of these stories have a bright 12 to 24 months ahead of them. Because no case here is getting killed. If anything, they're getting actually better. And I don't think they were expensive before these news releases. Which one will move when, I have absolutely no idea. I just think that on average, just across these companies here, I think, I would expect... Yeah, I mean, some could obviously be like 5 to 10 baggers if things go really well. Maybe not everyone obviously will play out that well. And if they actually become big success stories, it will still be like, 1 to 2 years for them to revalue, because it's really a process. I mean, in my opinion, Magna should be 100% higher today, but it isn't, because it's a process. It goes up, and then you have profit takers and top pickers, traders basically, and then you have other longs who's picking up shares, and maybe the profit takers see it go down and they start buying again, etc. I mean, most people are short-term traders anyway, and the fair value is more of a magnet, that it's okay, if I think something is cheap, I have no idea when it will go up, I just think that it will go up. So I think, for example, that Magna Mining, based on what I know now, I think that is a high probability doubler still, without any additional exploration success really. It's just Mr. Market will take some time to digest that. And the ones who are taking profits, there must be, let's say, new buyers, etc., etc. I mean, so far I have actually net added today, so I'm not selling my shares. I'm not creating any selling pressure, but not everybody agrees with my view. Obviously, some are happy just to be up 30% or 50%, and like, okay, now I made some money here, so I'm gonna leave. Or some trader like, I think the top is in, so I'll be selling here, etc. So there's like a bunch of different time horizons and strategies that are colliding basically, and that's why we have these ups and downs. My goal is I think trading is very hard. Being a short-term investor is even harder still. And I think that's just money-losing propositions, pretty much. So I take advantage more of the traders. I mean, again, to me, Magna Mining should already be 100% higher after having gone up 100%. So any seller, for example, I think they made a mistake. I think they are making mistakes right now selling. So we had these, 20% corrections, then it went up, 20% corrections, then it went up. So you're never going to get away from that, because that's how the markets work. That, the flow of funds, etc., shift. It's just that, I think with stores like that, I don't think trading is the way to go, because the whole point of buying something cheap is that, hey, I think this gap is going to close. I don't know when, but I'm going to wait until it closes. Anyway, consider me biased. I own shares of all companies. Many, if not all, are banner sponsors. So do your own due diligence. Take responsibility for your own actions. I can't guarantee that any of these stores will be a success, and I have no idea where any of them are going to trade in the short term, especially. Not investing advice. Hit the like button if you like this stuff. Take care. Bye.